Yeah, and I think, when I really think about the loan and all of the benefits that it has, and I tell people, like, this is not a loan for everybody, right? This is not a loan for somebody that lives paycheck to paycheck. It's just not going to be, a loan for that type of person. However, in my opinion, what's so great about it is, number one, you're able to save tens of thousands of dollars in interest over the life of the loan as compared to a traditional 30-year fixed. Even if you got into a 30-year fixed at a low 3%, interest rate, this product is still going to allow you to save that much more interest. The second huge benefit for me, and I'm in mortgage and real estate, so being in mortgage, well, especially in real estate, we flip properties, we do a lot of different like real estate investing and stuff like that. So we need liquid funds. So if we pay down, our mortgage balance and we have that equity, or maybe we even do a cash out refi, take the money out, we don't have to use that money right away, but it's available for us if we wanted to go buy a property, right?
Yeah, great.
So always
Great point. Great point, because to go achieve that in the conventional mortgage world, you're almost rushed to make that decision based on the interest rate environment, right? Where if you're considering making another real estate purchase in the future, whether that's near term or later this year, you're kind of looking at you're being influenced by the interest rate environment today in order to rush into another refinance and take some cash out, even though you may not be ready to buy, right? You're not necessarily searching for the property yet. Maybe that's a July or August event. And so you're not out there actively searching, but you're kind of forced in a way to consider refinancing and incurring those costs and taking on a higher payment amount in that traditional mortgage if you were to do that right now, right? So in the all-in-one world, you don't have to do that. You refinance into it. And by the way, you mentioned low interest rates. Our typical customer is the one that is refinancing out of the historically low rate that they refinanced into just, a year ago, or even less in some cases. Truly, we are refinancing people out of their 2.5%, sometimes lower, traditional mortgage, where they have 29 years left on it, into the all-in-one loan. Yes, it has a higher rate. It's still very competitive, very low from a historical standpoint. But again, we're providing the customer complete control of their principal balance and their payoff trajectory and the use of their equity money, and much greater control of their interest expense. So the upside to the all-in-one loan is substantial. Also, because if they do that refinance right now, we can supply them access to equity above and beyond their principal balance, so they don't have to take that at closing. Exactly. Just keep that there and available for when they're ready, and they can just write a check right out of it or wire the money to escrow, and even make an all cash offer in a lot of cases and win a more competitive deal. So a variety of different, opportunities. And I think that's the biggest value. I keep repeating this, but it's the maneuverability, the optionality, high optionality. You don't get that with, especially out of the mortgage industry in terms of mortgage products. This allows you to customize the result based on what you want and your behavior.
Well, and the thing is, if you take money out on a cash out refi, let's just say, you want to cash out your equity, you take a cash out refi. Well, now you're paying interest on money that you may or may not need at this time. And then it's sitting idle in the checking account, which is
earning nothing. Yeah.
It's the complete opposite of what, the all-in-one loan is here for. And it's so funny because right now I hear so many people say to me, you know what, I think I just need to sell my house and buy something else, but I don't know where to go. And the reason why they want to sell their home is not because they don't like their home. It's because they want to cash out on the equity that they now have because prices have gone up so much. So with this particular product, what they can do is refinance into it, take out however much to just pay off their mortgage, have that equity there to be able to use for whenever it is that they want to use it, not have to pay interest on it, and essentially stay in their home, not just have to sell their home to take up, to get the money to be able to do something in the future. They can do it with the all-in-one loan.
Totally. And I know that you work with, real estate investors as well, Danielle. If you don't mind, I can touch on that. I think that it's a phenomenal program for those folks that are really building their wealth portfolio, their asset portfolio with additional real estate. And this can be applied to not only primary residences and second homes, but also to investment properties. And it's a phenomenal way to manage that, that flow of income, rental income. Because, as a real estate investor and owner, I would think that you would want to achieve a couple things. Number one, I think that loyal renters that pay on time are very valuable, right? You don't want to scare them away. You'd like to have more of those, right? That rent your properties. Number two, you also want to grow your positive cash flow. You want to grow your monthly cash flow in that property. And traditionally, there's only a couple of different ways to be able to achieve that. That is, you either raise rents and scare away that loyal customer, right? You can't price yourself out of the market with your rental cost. And number two, the only other way is to refinance your mortgage again. But rates don't always cooperate. They're not cooperating right this moment on conventional mortgages. So you can't always lower your payment in order to grow your cash flow in that rental property. Well, the all-in-one loan, again, solves those issues. You don't have to continue to chase interest rates or even necessarily raise rates. Instead, you just flow your rental income directly into the mortgage, into the all-in-one, and that reduces your monthly expense automatically. So that grows the difference between what you're collecting in rents and what your interest obligation is each month automatically for you. So you're growing your positive cash flow, right? And then, and again, of course, you have an easier time stroking a check and buying another property. You're paying for a repair, if that comes up. So yeah, a lot of different benefits.
Huge. It's huge for real estate investors.